Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today we've got a great episode because, of course, Bitcoin is looking bullish again, and that means that crypto is feeling bullish again. A lot of you probably made money in the market yesterday, and we've been waiting for quite some time for Bitcoin to just friggin' do something. And suddenly, there it went, right? Suddenly, it just blast off, right? And if you could be caught, unaware if you weren't prepared, which is why we've been talking about not being a perma bear, but also not being a perma bull for the last 5 episodes on this channel. We made it very clear here at Alpha Commission that today or yesterday was going to be a very important day, and that we had this double bottom on Bitcoin, which meant that we were at support. With all these other supports, we went over it in detail, and there was a good likelihood that we would push up at least to this mid range of our wedge, if not to the top of the wedge. And if we broke out, the level that I set that we were talking about was 39,000, 200-ish, 39,400-ish, depending on the analysis. And, we have captured that area, right? So we are over this previous area right here, and we're actually bullishly retracing. We haven't broken down or anything. We're bullishly retracing with the possibility of future pumps. Do not be a perma bull, but do not be a perma bear. And I want to drive that home. Just be a clever little alpha monkey and, trade and always be taking your profit whenever possible, while on the macro level we're on a downtrend. But you did not want to be a bear yesterday. If you were a bear, you had no idea what was coming next, right? So there was just, blood on the streets for all the bears as Bitcoin skyrocketed. And of course, having understood the macroeconomics that were at play, that we were at support, and having all of those levels that I presented to you in several episodes for how we could reclaim some bullishness. Although I was definitely supporting the idea of watching for weakness and having your stop losses, I did want to give something back, and so I very rarely do this. You guys who've been watching this show the entire time know that I almost never give calls. But yesterday in the early morning, I gave some calls in the Discords, my friend's Discord and my Discord, which were the coins that I have on the screen right here. And I just want to go over them because I don't give calls that often, and I do talk about potential downsides. Many people may think that I am a perma bear, but that is anything but the truth. I really hope that we have a bull run. I strongly would prefer a bull run rather than, say, a crypto winter. I understand that most of the money you can make the most money in a crypto winter, but I'd rather be putting food on the table. I'd rather people be in good shape than to have to suffer a drought and see all the carnage, uh, you know, with pretty innocent traders that maybe have been misled by different influencers that are out there, right? And also, of course, the criminal Jerome Powell, who basically has manipulated this market since the Trump administration and has just created basically the world's largest pump and dump with stocks. And, of course, the super wealthy get away with it, and the little guys suffer. But let's see how I did. So I went and, measured the accuracy of my calls here, and you can see them on the screen. And so one by one, I just wanted to be held accountable for what I was putting out there in the discords and in our chats, because I don't want to lead people astray. Near 30% pump. Route, 25% pump. Gala, 33% pump. Pyre, 30% pump. NACA, 30% pump. Hathor, 25% pump. Engine, 16%. EFI, 35%. Blocktopia, 24%. Rune, 30%. Floki Inu, right? It had a good setup, 20%. Mana, 20%. POLK, 30%. LSS, 17%. Suku, that was a wild card. I didn't really know what it is. I just liked its setup. 9%. Cyrus, 20%. MTV, 20%. Remark, 25%. Render, 44%. Zilica, 50%. And Network, 55%. And again, just in case you think I'm BSing you guys, these are actual calls that I made yesterday at 9:53 a.m. before the Fed meeting had concluded, when I saw all indications were looking towards a potential just modest 50 basis points price increase on the rate, 50 basis points increase in the rates. And, this understanding was made because I do believe that Jerome Powell does not have the backbone to do what is necessary to get inflation under control, and he's kind of praying that the market will take care of itself. And so this does remove the possibility of extreme hawkishness from the Federal Reserve, and that gave some confidence to the markets. I was front running the Q&A session, which I think the rest of the market was waiting for. And in the Q&A session, Jerome Powell said that 75 basis points was not on the table, and the market really liked that. I picked it up in advance because if he was going to front load the interest rate increases, then he should have done 75 basis points or 100 basis points yesterday. He should have done that yesterday, and he didn't. He's not the responsible man that we need him to be to fight inflation and to, get us in line with the, with a schedule of increases that can avoid a recession. I think he's going to leave his job, and then we're all just going to be stuck with a recession. But we'll see. We'll see. Okay. So that's why I say don't be a perma bear and don't be a perma bull. If you're a perma bear, you're going to miss out on these gains that I called for my friends, right? And for our Discord members, which I asked them to take a look at, and all of these ended up being huge winners. There's no one who wouldn't have wanted to achieve those gains, and I think that those were very good calls. If we compare it to the rest of the market, let's go ahead and look at the total, right, for the market in general. From here, we increased 6.5%, right? So let's do the total 3, which excludes Bitcoin and Ethereum, just the altcoins. And let's take it even from way down here, and we got 10%. Okay, the market pumped 10% overall. Even if you just, remove Ethereum and Bitcoin, which are extremely slow, the market pumped 10%. Well, my calls pumped 30%, 25%, 44%, 50%, and 55%. So these were very good calls. It shows me that I'm on the right track. And if you guys like this type of content, maybe I will do a little bit more of it as we go forward, and maybe I will put some things on videos if it's something that you would like to have, advanced knowledge of which coins I'm looking at on these key kind of dates where the markets can shift. Because if anyone had taken these calls, they could have made a lot of money. And if you like that, let me know, and just understand I'm not a perma bear. I just am highly selective when I trade, and I want it to be a good trade. I don't want us to be losers, and I don't want us to be moon boys, right? Don't be doom boys, but don't be moon boys. And as I was talking about the Fed, we're not out of the woods. We're not out of the woods, guys. Okay, this market is going to continue to have some issues. All right, we're still in this macro structure, which is a bit bearish. Okay, just because we have a little spike up here, it doesn't mean that we've done anything amazing. Everyone gets super moon boyish very fast, and that's when the market starts to turn on them, and you can see just a sudden slam down. Okay, and that can be seen in the open interest, that can be seen in the leverage that people put into the market one way or another. So what I'm expecting is that we do have a pullback following this breakout, and that we may pump up to that 41.5 to $42,000 level that I've been talking about for weeks. That's necessary to kind of reclaim this area, make this kind of a macro low here, or a medium time frame low, and see where our next high can be put in. And the way to kind of visualize this is this sort of movement. Let me go ahead and turn this white. This is like, just imagine this is a high, this area here is a low, this is a high, right? Let's just call this all low. This is a high, and then if we've established a low, the way we can confirm that is by getting above that kind of $42,000 area, but more specifically, we want something that's bullishly high, in which case we're going to be looking for taking out this area, above this kind of resistance that we've been facing. If we just bump our heads on this resistance, then it's just going to be another lower high in a series of lower highs, and that's not going to bode well for the market, right? So you see where I'm coming from, I hope. We want to put in eventually a higher high, or at least bullishly get above this resistance that we've been bumping our heads on here, 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 kind of here, here, and we don't want to do it again. If we do, we're probably going to come back and maybe check out those 35,000, or maybe 37,000 again, whatever levels, right? And maybe this low isn't even done yet. But the longer we go sideways, the more likely it is that the low in this area is put in and that we have a high next. We can't just continuously go down. We have to have some type of ups in order to check those supply and demand zones. And of course, as the world offers volatility, those will be our trading opportunities. Let's go ahead and put the 5-day on, because I do want to just check in with the good old Gaussian channels. And as you can see, we have pumped bullishly out of the Gaussian channel breakdown, which is good news. This was a governmental intervention, right? So we could have continued to break down, but the government came out with good news, and so we ended up pumping, right? Well, we can see similar types of things happening over here, where we have, wicks, and then we have some candle closes, and then a major area of the candle closing under. And if we can't get back up to that midline, actually above the midline, right? Because you have to consider that this curves whatever the direction the price action is. So if we get price action up here, then it's going to start to curve up. If price action sits down here, it's going to curve down, right? And let me go ahead and see why this is so faint. There we go. And so what we're doing over here is largely the same thing. We had a whole bunch of wicks, and then we're starting to see, here was a candle close outside of the Gaussian channel, but now we're seeing candle closes while it's red, and we haven't gotten back up to the mid channel, right? That's the danger, that we haven't gotten back up to the mid channel, And so what did I say? We wanted to take out that 42,000. We want to take out 45,000 just to get over this resistance here. And then in previous episodes, as I was mentioning, we need to get really that 47, 48,000 because that's when we start bending things back up. And if we look at our weekly EMAs, you can see we're still just riding on that 89, just riding on that 89. And although we're being uplifted by the 89, you can see our price action is still being pushed down by the rest of the EMAs. And this crossing has not been avoided. It's just sharpening, right? It's just sharpening. We have to get above these price actions. Hence, the middle of it, right? The middle of all of these EMA price action, the middle of all of this EMA's price action is right here at, surprise, surprise, around 41,000. So if we can get to 41,500, 42,000, then we're going to start curving some of these bottom ones up. That's going to give us the potential to potentially squeeze to 44,000, which is going to get all of them curving up when we're at around 45,000. And if all of them are pointing up on the weekly, then there's a possibility that we can squeeze to 47 to 48, and that's going to change our monthly outlook, which looks really bad, guys. This monthly outlook is squeezing to the downside. Okay, this is one of these crazy squeezes. Look at this. On the monthly, we have a 1, 2, 3, 4 candles closing between the 10 and the 20, getting ready to squeeze to the downside. And the only saving grace we have here is that our 20 has a very slight uptick due to this one candle, thanks to the Federal Reserve intervention today. If that goes away, if this candle fades, if there is any signs of weakness in the market, then this slight uptick on this 20 EMA can turn back down, and that can just trigger this whole thing to cascade to the downside. What would that number be approximately? I mean, you can see it, right? It's approximately, let's just say 37,500. If we break below 37,500 again, you're almost guaranteed to have been curving the 20 down, okay? And definitely if we get below 37,000, things are just curving down to the downside, and this is going to be a squeeze play to the downside, and it is going to be a megalithic dump. Okay. Back on the weekly, let's go ahead and double check our. Let's see, what should we look at here? Let's go ahead and let's just look at the death cross, see where things are lining up, turn off those EMAs, get a clear view. And yep, the 89 is precisely, this purple line is precisely on track with the projection that I made. So we're still heading in this area. We're still in the death squeeze. How are the 50s? Well, they are getting a little bit flatter, which is a good thing. So let's go ahead and just bring this down a bit. And we can say that maybe we have, maybe we have a chance. We're actually modifying this death cross for the first time in a very long time, where it's just a little bit less dangerous than it was before. Okay. But maybe we have a little bit more time even, right? It could be that we end up pumping to, 40 to maybe even 42, but we fail to get over 42. We come back down, and this could take a month, and then we get back into this type of a zone where we get squeezed to the downside if there happens to be some bad news at some point. One thing that we do have going for us if we do end up pumping right now is, of course, our volatility is increasing On the 5-day, let me just go ahead and show you what that looks like. We have this, our volatility is contracting. And this is where I projected, you'll remember I drew these lines a while ago. This is where I projected that we might start to take off with them. This is an unusually large consolidation of low volatility, which according to Crown Crypto, who all of this is his idea for using the 5-day chart for this purpose, is so credit where credit is due. His idea was that that's going to actually end up with a even more explosive move than typical. And having back tested those things, that move would suggest a 40 to 50% move in either direction, depending on how our Stokes is turned at the time that this volatility explodes up, whenever it decides to explode up. And then, of course, I personally have been watching the 2-week do something very interesting. And also, you can look at the monthly, where the monthly is at its own extremes, right? So its own extremes. There's a clear trend here on the monthly as well. And you can see the EMA on the monthly is starting to get into a possible area where it could have a crossover at some point, and whenever they cross over, there is an explosion. So not only do we have a 5-day, right, which could come at any point now, but we also have that monthly, and then we also have this 2-week, where if you go ahead and look at the trend on this one, the 2-week is having the same thing build up. Huge explosive moves. Guys, this has only happened once. You could consider this twice, but that wasn't really the move. Once, twice, 3 times where we did the full expansion on the 2-week volatility chart. We are getting to that point where we're having these kind of bounces that lead up to the next move, right? Like here we have 1 peak, 2 peak, 1 peak. This is kind of like a second peak. It's just like a very overextended one, right? And same here. You just have these kind of like little, little movements, right? This is a little bit more exaggerated, a little bit more exaggerated, and maybe we're gonna have something, maybe that 2-week or the 5-day fires off, and then we go 40% in one direction, and then we actually have another volatility that we have to work with. That might be a massive bull run, I'm thinking, right? So potentially, I mean, unless Bitcoin's going to zero, right? Unless Bitcoin's going to zero, we are on track to be building up the type of volatility run that could take us on a massive, massive bull run, assuming that the 5-day, works through its stuff, and then the 2-week and the monthly has the opportunity to do something even crazier. Okay, so we'll see, guys. There's a lot of potential in this market for an explosive upside. It's just you have to be aware that there's also the potential for an explosive downside. And that's why I say don't be a perma bear, don't be a perma bull, just be a clever little alpha monkey and do your stop losses and your risk management and take your profit wherever you can, because these charts are getting pretty complex. And the area that we're building up is highly suspect, highly suspect. Watch those levels, 42,000, 45,000, and 47,000. And then on the downside, we're looking at that, $35,000, $33,000 area, if not lower. If we do have an explosive move, the explosive move could take us, it could take us into the low 20s. Let's just put it that way. All right, guys. I hope you were able to take some trades yesterday and that you made some money. But if not, keep in mind that we do have a pretty good setup here on the daily. Let's go ahead and look at our MACD. We are turning up on the MACD, and our RSI is also getting out of that bearish kind of area. So we can just have a little bit more of a neutral area to exist in. Which it's interesting. I think the colors on my chart changed. But anyway, it looks like this is real. It looks like we do have a genuine movement, and perhaps another couple drives until we get too overheated. There can be a pullback, and that may be just a buying opportunity. In fact, yep, sort of like this right here, right? It may be a buying opportunity. Not financial advice. This market has been very tricky lately, and you can follow things up and then they suddenly dump on you. So don't forget those stop losses. All right. Okay, guys, that was your alpha for the day. Stay safe and happy trading.